Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to look at the comment section. I'm going to give comments on your guys' comments or questions and give you my financial opinion. So let's read through a couple of comments. I'll give you my opinions and my thoughts and I guess the paradigm of how I look at things when looking at this. So let's dive into the first one. So the comment is, I've read a lot of opinions saying cash is king and some people claiming they're even 90% in cash. Pretty sure it goes well for now, but at the same time, guys like Matthew Piepenburg, Andy Schechtman warned that most of the world had enough of USD supremacy and inflation export. On one hand, there's a milkshake theory, but on the other, some heavy folks are gathering to have something new, most likely based on gold, given how physical gold and silver are being drained off COMEX for some time already. BRICS are pretty ignored and underestimated. And now you read that Saudis are considering dumping petrodollar parity too. And I can tell you this. All right. So what I do is a lot of people, what happens to them is they get obsessed with the now. And they look at things from a very short-term perspective. They look at things that are right in front of their face. I talked about this before in some of my other videos, if you were to look backwards. So they're all looking at things right in front of their face. They are blinded by the big picture view. So every single market up move and down move is either a vote against or for whatever their paradigm of thought is. And the market movement may have nothing to do with what they think is moving the markets. And that's what's dangerous, is people are applying what they think is a correct reasoning of why a market is moving up and down. What I do, for the most part, is I just say, all right, scrap the whole short term. The short term is just a bunch of garbage. People don't know why the moves are going up and down. If the volatility in uranium is plus or minus 50%, or up a couple 100%, pullback of 50%, up a couple 100%, pullback of 50%. You may or may not know the reasoning of each one of those 50% pullbacks. You could be completely guessing, thinking you're getting it right, and you're just getting lucky. That's what I meant by some people by just getting lucky. Because timing the short term is pretty dang difficult. Short term being some months. The years, the decades that come, that is what I invest for. So I look at this and we see a gigantic bottom in just about all of these different things, all basically connecting up a gigantic commodity boom. And what happens is a lot of investors, especially new ones, are too chicken to hold on. That's really what it comes down to. They don't have the confidence in the long-term outlook of commodities. They don't have what it takes. Most people don't have what it takes to make 10, 20, 30 times their money. They don't have it. And that's okay. It might be a personality trait. It may be something that they haven't done their research yet. And they don't know what is coming. At least what I think is coming. And obviously no one has nailed this 100%, 100% of everything 100% of the time. But what I see through the market deficits, what I see through all of the charts that we gather and look at together on the channel, the charts could be the interest rates bottoming from a 40-year decline and turning up and breaking that downtrend. You can see the CRB index putting in a falling wedge and breaking that to the upside, and we're getting our first pullback. We can see it in the commodity to stock ratio at 100-year lows. We can see that the S&P 500 is topping. We can see that we've got an inverted yield curve. We've got inflation. We've got the bond market selling off. It's all in alignment, I should say, right now. It's all in alignment. So what I try to do is I don't focus on the short term. I've talked about this many times on the channel. I say get the big picture right. And one of the mistakes that I've had is getting the big picture right, not holding on long enough. I should have held through all of the volatility in 2009 and just bought at that bottom and held on. Yeah, it's easy looking backwards, but What I didn't know at that time is that I didn't know what the real estate cycle was. We had an overbuild scenario in 2007 and 8, and you could see that something was wrong. It crashed, and then we went back up. Now, here's my question. Is it bad to hold through crashes? Why is it so bad to hold through a crash? Everyone is panicking about a drawdown in their account. What if, you can look at this. If you hedge yourself with time and you ride through a recession or a dip or whatever, and I'm not calling for whatever. Everyone is trying to predict the future. That is not what you want to do. What you want to do is find the value, find where the value is in the market, and then buy the value. What other thing can you do? Are you really going to try to predict every little movement that's coming along? How many people get that right? 0? Very few people predict from a month-to-month basis of what's going on in these markets. I see a lot of people on YouTube, and a lot of these guys that when you watch them, they're not going to be right. They haven't been right. Harry Dent's been calling a crash forever. Peter Schiff was calling $5,000 gold in 2009. A lot, and I'm not trying to pick on these guys. I'm just saying all of them have made bad calls. And they were all kind of short-term predictions. But what I've seen and what I've gathered was, and those predictions being wrong have driven me to look at the data and do my own research, then listen to a lot of these people. I just look at it and say, look, we're bottoming, we're going to go higher, and we're going to ride through a lot of volatility. I look at the inventory levels, they're depleting. Well, I'm going to go long in it. I'm going to go long and basically go long in whatever government's trying to stop. If they're trying to stop oil usage, go long oil. It seems like you do the opposite of whatever government does, it seems to work out all right. So, cash, I can tell you with cash will go down in purchasing power. 100% guaranteed. So then the question is, you're balancing trying to make a short-term market timing prediction about something that we hardly ever have in history. We haven't had deflation for any length of time since 1970. Now, I'll pull that up and show you guys so you know what I'm talking about. What this is I'm going to long-term trends, and if you look at the inflation and M2 money supply, which is right here, this is when we came off the gold standard in 1970. Is this guy right here? So it's basically 50 years worth of information. Where does the red line go under 0? We did it in 2008, and we came right back in 2009, and we really haven't gone much below 0 at all since that time frame in existence. Why are people trying to bet on something that hasn't happened in 50 years in terms of the inflation rate going into deflation? Now, there could be disinflationary periods. I agree with that, and we're probably going to get one at some point. But that highly depends on what goes down in the oil markets and the supply demand of oil, which is, when you look at history and you look at this stuff, it seems like the 1970s was driven by more money coming into the system and an energy shortage. So I think that's similar to what we have today. It's that simple. And I know some people, it's like the 1940s. The 1940s are similar, but I also see things that aren't similar. So maybe you can mix this thing up with 1940s and 1970s and 60s and all this other stuff, mix it all together, and that's probably what we have today. Let's go to some other ones here. So how do you think the windfall taxes on oil and gas companies will affect our investments? I don't think it's going to affect it much at all. Why? Because it's just going to drive the oil and gas price higher. That's not going to be something where oil and gas companies are going to want to invest more in an environment like that. Their costs are just going to go up. And you know what they're going to do? They don't pay taxes. We all do. So when a corporation pays taxes, they actually don't pay anything. It's the end consumer. If everything that they sell goes to a consumer and that consumer exchanges dollars or currency for that product, do you think they're the ones paying taxes? Where did they get the money? Where did they get the income? It's the customer paying for it. The customer pays all expenses of the company. So it's the money that comes in, your revenue minus your expenses, and whatever's left over is their profit. If they're getting taxed more, they're just going to raise the price up and pass it along to the consumer. That's all it is. So if someone is anti-corporations, if someone says we should tax those bad corporations, they're basically saying, I want to tax myself for whatever products I buy from these large corporations. That's all it is. It's that simple, guys. It says the move in oil in 2008 had nothing to do with fundamentals, claiming they're even 90% went here. The move in oil in 2008 had nothing to do with fundamentals. It was a rogue trader from SEM Group, Carlyle, who was short calls. Goldman Sachs ran the price up $10 in one day and forced them to puke. We collapsed to $30 shortly thereafter. It was driven driven by fundamentals. It's just maybe not the oil fundamentals. It was the fundamentals of money coming into the system, and it was driven by liquidity. Liquidity into the system, and that liquidity drove the price of everything higher. It was inflationary. That's simple, and it was coming from the housing market. The root cause of all of Earth's problems are the mega wealthy. We need to saute and eat them. When the rich hoard money, it deprives opportunity for the masses. Well, I don't know if that necessarily is a true statement. I'll explain why I don't think that's a true statement. The money, if you distribute it evenly throughout everybody, more than likely over time, we're just going to get a system that ends up the way it is today. In order to become wealthy, you have to provide products and services to people in ever greater quantities than what you are consuming yourself. So really, if you have a true free market and you have this free market that's out there, and the only way that you can obtain wealth is by under-consuming and over-providing a good or service to everyone, which then means, by definition, I would say, that a wealthy person is putting more value into the system than what they take out. They would be the least, I should say, they are the most willing to sacrifice themselves for other people in the greatest quantity. So what you're saying is that, and I'm not saying people who obtain their wealth through means that are, dirty, so to speak, where they're colluding and using government to gain power and wealth. But in a true free market where people are exchanging goods and services on a willingness, like they're willing to exchange, those who are wealthy are taking less things out of society than what they're putting in. So to say that comment there means that you haven't done your homework, in my opinion. You need to go through some more philosophy classes, or maybe some environmental ethics. Go through those classes and try to see what's going on there. What Britain will do is buy U.S. bonds instead of British bonds. U.S. dollars is the only game in town. No, it's not. They're going to get smoked. I don't think the U.S. dollar is strong. I think it's going down just like everything else. It says there will be deflation in assets that people own, stocks, houses, and inflation in stuff that people need, energy and food. It is absolutely naive to think that we will have a deflation. The food prices are predetermined to skyrocket next year thanks to this year's price of fertilizers. All the droughts in Europe, blah, blah, blah. And this mix of simultaneous deflation and inflation will cause stagflation. Yeah, it is going to be stagflation. But it's the root cause of this is energy driven. It's all like, if you were to go in. So what we do is, as an engineer, we have a failure, and then you look at the failure and you look at the root cause of the failure. What you want to do is you want to design out the flaws in the system. You want to go in and look for what is causing the problems. And what people do is they just kind of look at we'll call it the tertiary effects, or not the primary drivers of the problem. So there's going to be multiple problems or a chain of events that happens when something fails. But you have to go back all the way to the root of the problem. You know, a lot of people say like, oh, well, we don't have good health care. Well, a healthy person wouldn't need health care. So you have to go to the root of the problem. You know, if you look at cancer or you look at some of these things, a lot of it can be linked to poor habits. A lot of it could be linked to the environment or things that are external to the person and what they're doing. It's not all, you know, it's not as obvious what some people think. So what I think is if you do this root cause analysis and you look at it, all of the things that when I look at it kind of point to energy. Well, why are fertilizers expensive? Oh, because natural gas over in Europe is expensive. Why is natural gas expensive? And you just drill down and down and down. And then what it almost always goes to is a couple of things. It's either energy is constrained or we have too much money in the system, too much debt. Money is debt, debt is money, and there's too much money in the system. When money comes into the system, what it does is the supply of money increases dramatically, and it puts everything else into a shortage. And the real world can't respond to that quickness of the money that was created. So everything gets into a shortage, and hence people start bidding prices up for those scarce items, and it therefore is inflation. So the money supply growing at a faster rate than GDP is inflation. Now, there could be some really bad outcomes if you hit constraints in commodities and energy, because when you hit constraints, your GDP can't grow. But you're in a system that's designed where the money system has to grow. Then you get the imbalance of too much money chasing too few of goods because there's constraints in the system. That is stagflation. It's a constraint in the system with too much money chasing too few of goods. And the way that it all balances out is you have to destroy some things because there's not enough of that thing that's constrained in the system. So that is stagflation. And I think that's probably what we're in. I agree with that. Says, I probably criticize Andy more than most, but I need to respect his confidence in his market theory. Good video. What is the working definition for a deflationary crisis? A deflationary crisis is when it gets destroyed. So what you see in these deflationary outcomes usually is you see a housing market boom and then a housing market bust. The majority of credit in the system is created from real estate. And what happens is we go into a frenzy like the 1920s. Look at the 1920s, early 1920s, mid 1920s. There was a big real estate boom. Credit expanded rapidly. They started using these really bad loans, just like the mid 2000s. So they threw these loans out there. The housing market started to pull back because they overbuilt. They had too much inventory. They overbuilt, and then people got underwater. And then those bads were low. The loans went bad, and people couldn't pay them back, and that credit was destroyed. That's deflationary or a deleveraging in the system. And that deflation or deleveraging killed the markets for a long time. There was a lot of effects. And what I saw, I went through high school, and I didn't learn a thing in high school in history in terms of economics and history. I had to go back and look at it from a financial aspect. And then, the Great Depression was really more or less just it's a boom bust cycle. You get the boom cycle on the leveraging up phase of credit, and then you get a bust phase of the deleveraging of the credit on the backside. That is deflation. And the way that we measure inflation and deflation through the consumer price index, that was what we defined it back then. Today, it's got a little bit different definition. The definition of inflation is an increasing money supply. Deflation is when the money supply decreases or collapses. We measure inflation by the consumer price index, and that's what they use to measure it. If you look at how they do the consumer price index, you've got a good chunk of housing, a good chunk of energy, food, and some of those, those things in the consumer price index. So where we really see a problem is when money comes into the system and you see a constraint in the commodity sector and you can't grow your GDP. That's really when you come into a problem, because then your consumer price index goes through the roof. As we have looked and seen, UK, Europe, if you cut energy to the system, consumer price indexes start going higher. So what the Fed is trying to do is they're trying to front run the energy prices, and they're trying to kill the demand through increasing interest rates. I just don't know how successful history has shown that to work. And what has happened is the demographic had to run out, and basically what they're doing is they're just slowing down the real estate market. They're trying to bring it to a halt. They're trying to halt the leveraging up phase of a real estate cycle. They're slowing down the boom phase. Problem is, boom phases end with inventory, and we don't have inventory. There's your checkmate. You're stuck. So they're slowing things down, but I don't know if they can stop it. And I don't know how much control they have. So these guys that think that they've got the deflationary chisel, I just disagree with that viewpoint. They don't have deflation. They're not taking money out of the system. They're slowing things down. That's what they're trying to do. Will they be successful? I don't know. It depends on the relationship of things slowing down and the oil in the system, the supply of things, the supply of oil, the supply of natural gas, the supply of coal, the supply of those things. So they're trying to slow it down and buy time to get the supply to come back up. That's what they're trying to do, I think. It says uranium absolutely sucks. I agree, but when it goes, it will be something for the ages. In the meantime, I agree, worst trade ever. Andy, my friend, don't try to make sense of the chaos. It's all by design. A lot of people are really thinking that this is one big by design thing. It very well could be. I don't, I try not to think about it. What I try to do is I try to put together a portfolio that can withstand basically anything. And that really is precious metals. I don't see really how you can lose that much in precious metals, if anything. I've always gained in precious metals. And what you do is you just hold on and you do your ratio analysis swaps, and you just wait a long time. So, I mean, that's something that I look for, is something that's robust in any market condition. It's good in deflation. It's good in inflation. It's good basically anywhere. It's boring as heck, I can tell you that. And things don't move as fast as some of these other, things like uranium. It's not going to go as fast as uranium and these other ones. So I find the comfort in taking a little bit lower risk approach and piling a little bit more into physical metals than some of these higher risk investments. Nice work helping people stick to a plan. Yep, stick to a plan, guys. Insightful. Do you think coal could make a comeback in an energy crisis with oil skyrocketing and resistance to nuclear? Would the country run back to coal since it's cheaper and plentiful? I think that we've already been doing that in a worldwide scheme. We've already run to coal. It's already in motion. Coal, natural gas, oil, everything fossil fuel related that's worked in the past. Of course, we're going to go back to what works. I agree. And I like uranium too. It says buying low, eat your heart out with CCJ today, 13%, down 13%. I don't own any CCJ. I know a lot of people ask me why I don't, but it's probably going to work out in the end for them, though. Stock market crash now in October, which will drag everything down, including precious metals, due to liquidation in order to raise cash for margin calls. Wait till that happens for a nice buying opportunity. You know what I hear out of everyone? I don't hear anyone bullish. Everyone is bearish. That usually means it's a good time to buy, not to sell. Everyone's saying, wait for the crash, wait for the crash. I mean, we're talking everyone. There's no one bullish in the comments section in the overall markets. I'm not bullish in the overall markets. I'm bullish in uranium and in natural gas. And you know what I do when things go down? The only way that you can make use of something going down is you have to buy it when it's down. We're down right now. And if we go down further, I'm going to continue to buy into it. I look at this as a way to accumulate, and a way of storing wealth away from the dollar. Because as you see currencies around us start to collapse and bond markets doing very poorly, where do you think all that value is going to go? The value isn't being destroyed. It's just being transferred to certain items. It's coming. The question is, everyone's trying to time this. I'm over there. I've got positions. I'm just buying it if it goes down. So if it goes down, I get cheaper shares or cheaper assets or cheaper precious metals. If it goes up, I'm in it. Okay. It's that simple, guys. And I just hold on. All the big trends are in place, as far as I can tell. When you look at this, governments are looking to impose windfall tax on oil and gas companies. How do you see that affecting your investments? I don't see it affecting it. They're going to continue to go up. I think this complex of the dollar bond yield composite will reverse at a terminal rate. Well, everyone's making these predictions. Coming on down, there's a lot of sayings there. Yeah, bought Westinghouse Electric. The more a level is tested, the weaker it becomes. Wish I could understand where the big financial players who want to establish positions are. What's up with the CCJ crashing in after hours? Yeah, they're buying Westinghouse. We already know that. Look at all those thumbs up. Dollar and yields up. Didn't see that coming. Jamie Dimon, oil crisis should be treated almost as a matter of war at this point. I understand why Biden released the SPR and why Fed is tightening so aggressively. It has something to do with the war with Russia to deprive mortar of revenue and to break the back of inflation. I wonder how much the Fed is coordinating with DOD. Well, here's the problem with doing that. If they lower the price of oil, you get less oil in the future. So are they actually, is this going to work out for them? They do a short-term temporary strategic petroleum release. They're going, it's going to hurt Putin. No, it's not. I don't think it will. I don't think it's going to hurt him one bit because he's either going to get it today or tomorrow. What they're going to do is they're going to drain all of their inventory. And then what happens after that? A crisis comes and you have no inventory. It just doesn't make sense to me. When that's like saying when a crisis happens and you lose your job, that's the time that we should go spend a bunch of money and put a pool in the backyard and redo all the landscaping right when you lose your job. That's not what you do. You conserve. If you see problems in the market, let the price go up and conserve and wait for a problem and constrict your spending. At least that's what I would do. I wouldn't just flood the markets and try to make it cheaper by depleting your inventory. That doesn't make any sense. They're doing it for election purposes. I think it's all political. That's my take on it, at least. But that's what I've got for today, guys. I'll end it there. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And check out the website, Platinum Membership's the membership I would join if you'd like to join. All right, guys. Thanks for listening. This is Finding Value.